Now, for those in the room that don't know me, I'm Mariana Von Lucken. I'm one of the tax partners here at HLB. Yes, we do have 5 tax partners. Not as good looking as myself, but don't worry about that. I specialise in R&D, but also do other taxes. I couldn't even get a rise out of some people there, so it's going to be a tough morning, I can see. As you are aware, R&D is, when you do R&D, you're lodged with Oz industry, but ultimately how you get your money back here in Australia is through your tax return. So that's why tax is important, because it is in the Tax Act. Also presenting today is Damien Burke, over here. Okay, very shy. From Holding Redlich. He'll give us a bit more information about himself, but he specialises in taxation disputes and litigations. So he'll be presenting more on what he's been seeing in practice. You know, what are the reviews and audits happening? What's the outcome of it? I'll be presenting today, and then Damien will go after me. So why did you decide to attend today? That's rhetorical, don't answer. In the last few years, what we've seen is that the government has made a lot of noise. It's brought out taxpayer alerts, Oz Industries brought out guidance on what is R&D for software industries, for manufacturers, for agriculture, you name it, biotech. Brought some guidance out. We read the guidance, semi-helpful, but not fully helpful. And I'll go through that. And I think Damien has a slide with all the taxpayer alerts so you can sort of see. I like to give it to my clients, the taxpayer alerts and guidance, because they're the ones that are developing the IT or whatever it is they're doing from an R&D perspective, so it's always good for them to understand what the guidance does say. Now, more's going to be covered in the presentation, but what I'm going to cover off on, and sorry, I had some paper slides because I couldn't write everything down. Today I just wanted to inform you on the current status of the R&D. So you're making claim 30th June 2018, it's not a substitute accounting period. Then effectively I'm going to go through those rules, and that is going to be more of a reminder because nothing has changed for that year. Okay? And then I'm going to go through what are the proposed changes. And I say proposed because there's draft legislation out, but it's not yet law. And that is to apply from 1 July 2018. And I think when you walk out of this session today, what I hope you've learned quite a bit, but also one of the things is mainly documentation. Contemporaneous, can you say that for me, Damien? Contemporaneous. Thank you. Documentation. So document as you go. For some reason it's not coming out this morning. So as you document as you go. And for some taxpayers that's difficult to do. They may not have the resources to do that. But it is very important when you have a review. Should you have a review? So as I say, changes, yep, covered all that, great. So what is the current status of the R&D? So as you can see, there's 2 components of the R&D. Some of you are aware of this, I'm just giving you a bit of an update so it sets you in the mood, puts you in the play. So what we have currently is the refund. So 43.5%, that is the amount that you could get back from a claim. It's an offset and your turnover aggregated has to be under 20 million. So aggregated means not just your entity, but any entity that controls you. So these are the type of questions that are getting asked before, when you're doing an R&D plan with a specialist. There's criteria that has to be met. Before you even dive into what is, have you got R&D? The other one that is used a lot is 38.5. It's a rebate. I say a rebate because there's no cash back. It gets carried forward as losses. And you can use it later. So 38.5. And your turnover aggregated has to be over 20 million. Now this will get very confusing in a minute because the turnover test for R&D has not changed. But as you will find, the tax rate is changing for many organisations. So it adds a bit more complexity. Before I go into whether a client has R&D and, let's go down that path of finding out if we've got core activities and so on, I like to ask the question as to what benefit are you going to gain by going into this whole process of writing an application to Oz Industry, making sure you have your documentation, then looking at your costing and seeing does that costing relate to the R&D activities, what's the nexus and connection. So there's quite a bit to think about there. So first thing I like to do is understand what it is, the benefit. So if somebody says to me they've got 50,000 spend on R&D, I don't even know if they've got R&D yet, but 50,000, you do the numbers. And you go through it and you say to them, okay, have you got a turnover? Is there any taxable profits at the end? They say no. Is your turnover under 20 million? Yes. With your connected entities, and I explain what that is to them. They go, yes, great. Then at 30th of June, 43.5. That's the refund amount from 50,000. So that's 43 cents in the dollar that you're getting back. Now that sounds very good. Now you've got to put it in perspective. So what does that actually mean? Well, you would have got 27.5% under 20 million turnover, 27.5%, assuming you're carrying on a business, you're in that tax bracket. So if you're not profit okay, you don't have a tax to pay, but you would have had a carry forward loss of 27.5. So the difference is 16 cents in the dollar. So that's the incentive amount, if you like. You might get 43.5, but the incentive amount is 16 cents of the 43. And it's good to understand that. And then as you go up in, so remember it's still 20 million, so if you're in the 25 million, you might still be in the 27.5 tax bracket, but it's 38.5 the rebate, and that's 11 cents, and so on. If you're 30 cents, it's 8.5 cents. I hope that's clear, because that's, I think, really important to understand what the benefit is first before you dive into it. So just a refresher, a lot of people forget this, but to access, you've got to see if you're eligible first, which we've run through. If you've got any overseas spend, you have to put an overseas finding in. So 30th of June 2018, if you did overseas activities and you didn't put a finding in, forget it. You can't claim your overseas spend. But if you're doing it in 2019, overseas activity that's connected to the core and there's criteria, trust me, then you can put an application in. Better to put it earlier than later, as we found out. One of my clients here. Gives you time. So what happens if you put it a week before the end of the year? You haven't got time to make any adjustments to it. So if Oz Industry come along and ask for more information, they're willing to sort of make adjustments to the information, so long as you've got evidence and understand the project better. So you've got a full year to do that. Another thing you can also do if you're unsure whether you do have R&D and your shareholders are quite conscious and your founder is you can put an overseas, not an overseas, just a finding, advanced finding. So that means like a ruling to the Oz Industry to say, have I got R&D activity? There's a bit of work involved, but it's almost like putting an application together and having all the evidence to give to them, and they'll ask more questions. But then the result is that you'll know you've registered your activity, not registered it, but you'll know that your activity is R&D, and you can sleep comfortably at night. Then once whether you've done an overseas finding or advanced finding, what you need to do every year is make an application. So now, 30th of June 2018, you have 10 months to make an application. Doesn't matter whether you've done an advanced finding, you still have to make an application every year. And every year you're making it for the new activities that you're carrying out. So a project may continue, project outline stays the same, but the core activity or the supporting may change. I would say they have to change, otherwise what are you doing? And then you register, as I say, you lodge your tax return and you receive your refund. We like to do the tax returns, if we're doing both tax returns and on the Oz Industry application, we like to do them, start them at the same time. So once you put in your Oz Industry application, some I've seen turn around in 3 or 4 days, the registration, and some I've seen 2 weeks or a bit longer. Now remember, it's only a registration number. It is not an approval that you have R&D. Very, very nice of Oz Industry. That registration number goes into the tax return. So once we have that figure, the costing is finalised, because for the application you don't need to have the final costing, as in what your expenses are in relation to the R&D, what your claim is going to be for the R&D. So always look at these kind of criteria. I don't get that kind of kiss when I get seen. Hello? Someone just came in and gave someone a kiss, and I thought, so R&D application criteria. So understand you're carrying on R&D, we'll talk about that in a minute. You have to own the IP. So there are some software developers that carry out activities for clients. They don't own the IP. It's not going to pass the muster. You need to bear the financial burden. If you're say, I'm just going to use IT, because a lot of people in the room I know is IT software, meaning you have to support or risk or fund the activity. It's no good if somebody reimburses you for it. And there's some clawbacks if you do develop something and sell it. Your spend has to be greater than 20,000. Sometimes you can claim it under, but I would say that it may not be worth it if it's under 20 anyway. By the time you pay your advisors and the time you spend yourselves doing it. And making sure you have core activity. Or I'll do this in a minute. Track documentation. Track as you go. Document as you go. Your core activity. So this is something our clients love us not. When we talk about what is core activity. And some of you know you're conducting some sort of experimental activity, you've got some technical risk, you're producing some new knowledge. Not that you didn't know how to do it from the beginning. You've got to know why you didn't know how to do it from the beginning. You've done some research, it's new technology, and it goes on. And there's quite a bit of guidance on it, but again, it still comes back to the same thing. Have you got new knowledge? Did you have to do a systematic progression of work, being hypothesis, experiment, observation, to get to the answer? And that it can be very difficult when I talk to my IT software developers. They say, Mariana, that doesn't really work in reality. That's not how we do software development. So it can make it very difficult when you're going through the process to identify what is R&D and what's not. So taxpayer alert, as I've mentioned, are out there, guidance is out there. So common themes coming out across all the guidance, and I've just noted it here. Normal business activities are being carried as R&D. So there's a taxpayer alert on this. Normal business activity. So there's nothing really new and innovative that's being developed in Australia or the world. It's just business as usual. Contemporary mode, okay, document as you go. At the same time, documentation to support is lacking. So people haven't got documentation to support. And I think really what they're supporting is their core activity. So this activity here is what they need the documentation to support mostly. And we'll talk about documentation as we go through. Ineligible expenditure. So some expenditure in relation to certain activities are specifically excluded, or by their nature they're excluded. And they're being claimed. So software developers, companies tend to think in terms of whole projects rather than identifying specific activities as a component of the project. So a whole of project is what Oz Industry and ATO are concerned about. And what does that look like and what does that mean? Where it really comes down to identifying what is this new technology that you are developing and how everything relates to that. And could support it. So, you know, there could be activities that support the core directly. And it goes on to construction and farming and so on, but I won't cover that here now. So this is just, again, really experimental activities, what they're expecting to see, what this progression of work is. This is what they want documented, if you like. And when I say them, ATO, but basically Oz Industry. Oz Industry has the right to say, no, you don't have R&D, not the tax office. The tax office has to have, looks at the nexus between the expenditure and the R&D. Now, they're not sure that you have R&D. They'll go to Oz Industry and say, you know, can you check this? Can you audit or review these guys? Because I don't understand. So they do talk. So I'm going to go through the proposed changes. That was just a refresher just to keep everyone where we're at. So why the changes? I'll kind of run through a little bit of that, but I think it's failing what it's achieved to do, the R&D tax incentive. You might have had about 8,000 applicants and now there's 15,000. There's a lot of dodgy tax agents out there providing a service, and what I mean by that is, you know, they might be writing the plans for you, but they don't really know what the R&D is. So I think that's important to keep that in mind. Just don't go with anyone. Make sure, you know, they understand the rules. And that's, you're informed. After the session, you'll be informed, you'll get the slides. You can sort of ask some questions there. And what I have seen is that, unfortunately, even if you have gone with someone that's not reputable and you get audited, it's on you. You are the taxpayer that signs off. And although, you know, you can probably go back to the agent and claim some indemnity, if you can't find them, it's very hard to claim against them. So the cost of the incentive has exceeded the initial estimates. So from 1.8 billion to, in 2017, 3 billion. Quite a big spend, yeah? So they're a bit concerned that everyone's claiming what they shouldn't be claiming. And there's been some reviews and recommendations. And I think Damien's just got a slide on those a little bit more, hasn't he? He's got a bit of a milestone and timeline. So the change is 43.5% to 41% they're proposing. And what they're doing is, remember we had a fixed rate of 43.5%. Now what they're doing is 41.5%. So it's going to be based on linking a tax rate plus a premium, an R&D premium of 13.5%. So whatever your tax rate is, plus the premium of 13.5%. I've got a slide on that in a minute. Turnover test hasn't changed. Then for large entities, it's very complex. Now, if the legislation goes through the way it is, I think it adds complexity to understand what it is that you're going to get back or what your rebate is. So the complexity is that it's 38.5% now fixed, and what they're going to be doing is changing it, linking the tax rate to the incentive, and it's a progressive incentive, so I'll go through that. So you could get anywhere between 31.5% to 42.5%. The more R&D spend you have in your organisation versus your expenditure, the higher this progressive rate is. So you'll end up at that 42.5%. If you're dabbling in it, it's probably not going to be as worthwhile. Turnover hasn't changed. So look, you'll get these slides. I know there's a lot of information to absorb at once, but I just wanted to give you a bit of a feel of what it looks like. So whatever your tax rate is, it's always important. I'll just use this little zip. Yeah. So whatever your tax rate is, so you know you've got all these tax rates. Remember we talked about the fact that your turnover test is 20 million, whether you get the rebate or refund. But for tax, they don't care. You know, you're getting all these. There's all these changes in tax rates. So these, you could be anywhere in there, and then from your R&D, you could be anywhere in there, and then you've got your what the incentive is. So if you're in that low scale, it's 4%, the incentive. So your tax rate plus the 4%. Okay, so it's 27.5 plus 4%, which gives you the 31.5. So that is what you're actually, the benefit of it. I always like to look at the benefit of things. So what the proposed change is saying, if your turnover is under 20 million, as I say, it's linking your corporate tax rate to your premium. Premium doesn't change, but this could effectively change. So as you know, well, I was just reading the AFR for kicks this morning. Nothing else to do, I guess. No, that's my husband tells me I have to read it. So I say, okay, and be informed. But Scott Morrison is proposing to bring forward the tax cuts. As you know, they've brought it down to 27.5 and bringing it down to 25. Now that was proposed to come in 2027. Now he's proposing to bring it forward 5 years, so to 2022. So what does that mean? I guess that means that your rate's going to be 25% for a refund and 13.5, assuming nothing changes in the next few years, and everything is moving quickly. So your rate is going to be 38.5 instead of 41, in 2022 when the tax rate goes down. So that's why they've linked it. There's also a cap. So if your refund is, I don't know who in the room gets a refund of more than 4 million, but it's going to be capped at 4 million. The rest gets carried forward. You don't lose it, but you don't get the cash. Excluding clinical trials. So if you're doing clinical trials, and there's a definition of what that means, but usually it's that pharmaceutical biotech industry. If your turnover is greater than 20 million, same thing, there's an increase. There's a link between the corporate and they call it this R&D intensive premium. So how does that actually work? Well, what it does is, so keeping in mind that your tax rate can be anywhere between that, it looks at intensity range, it looks at your deductions. So if you say, I'll give you an example in a minute so it'll be easier to run through. If your deductions, you look at your R&D deductions and you look at your total expenditure and you divide the two. So R&D deductions over total expenditure and you get a range. So your range is 2%. So that's what I'm saying, if you don't do hardly any R&D, it's going to range to 2%. So you get a 4% incentive. So it's either going to be 27.5 plus 4, 31.5 as your R&D rebate. Is it worthwhile still doing for 4%? Remember, you're going to get your tax loss, or you're going to carry forward your normal tax rate. And this is important to understand because when Damien goes through it, you'll see that documentation is key. That's quite a lot of effort, a lot of work. And I'm not trying to dissuade you from doing R&D because I do that work, so. But I just want you to understand the implications of doing it. And so on. So if your expenses are, again, the range, if it's 10%, it's 6.5. If it's over 10%, it's 9. And so on. Oh, sorry, between 5 and 10, it's 9. And over 10, it's 12.5. So that's pretty good, that one there. So just run through this example quickly, because I needed to get my head around it, and it took me a little time. I'm a bit slow and so. But if a company has total expenditure of 30 million, and their R&D spend is 12 million, you divide the two, pretty simple maths, 40%. So that means, if I look down here, my intensity rate is 40%, so greater than 10%, great. So that means I get 12.5 plus my tax rate, perfect. It's not so simple because it's a progressive rate, so it's a bit like your income tax progression rate. So it goes and says, all right, I've got a spend of 12 million. I normally would think, okay, 12.5 plus the 27, okay, 40% of 12 million. That's my rebate. No, unfortunately it doesn't work that way. This is how ingenious they are. I'm going to do progressive. So I'm going to go 30 million, my expenditure, not in my R&D, over times 2%, which gives me my 600,000. I'm going to times that by my rate for that level, gives me that. And then I'm going to go 5% of 30 million, which is 1.5 million, less, yeah, I know, you're all shaking your head, right? 600,000. Who's going to sit there doing this? Well, we are. Better things to do in life, right? It's easier 38.5. But this is what they're proposing. And I've just done another example you can go through in your own leisure. Call me if you think you're confused, because it confused me. This is more on the where you've got your 30 cents in the dollar. So just another, so it just shows you there that, the more R&D spend you have on your over 20 million, great. So I'm not going to confuse you more on that, but I just wanted, you've got that example, you can run through it and call me anytime. My details are somewhere. Expenditure caps changed. I don't have this issue because I don't have clients in that, unfortunately, 100 million spend, so sorry. But from 1 July, if you're spending 100 million on R&D, then you've got an increase to 150 million. Anything over that just gets the normal tax rate. And there's some changes to the clawback provision. Some people get grants. So the grants and the R&D spend, there might be a little difference there that you can claim. But they're trying to get rid of all that. And the feedstock rules, they're just complex. But they're changing those rules to effectively fall in line to say that you don't get an incentive. Another thing they brought out is improving administration and transparency of the incentive tax. That's a common theme, isn't it, for multinationals? But now they're attacking everyone. Enforcing additional resources, so they're going to get additional resources. But they can't check everyone. because they don't really have enough resources, but we don't want to be the unfortunate. Transparency. 2 years following from the end of our financial year, the Commissioner must publish the names of the claimants of R&D. So now they're going to publish everything. The name of the company, ADN, and the R&D. I don't know the details yet, but that's what they're going to propose. And administration, they're imposing like a 3-month limit. So if you're getting a review and you need to put your R&D claim in, but you want the results of your review, you'll have that 3-month limit instead of a case by case. And so just on my last few slides, then I'll hand it over to Damien. The importance, I think, is record keeping. Operates a self-assessment. So you assess, self-assess. You put your claim in. You're responsible. Records. Should establish knowledge, information, experiments undertaken. Document as you go. 5-year minimum record keeping rule. I keep it for longer if you're doing R&D. Good knowledge and records management help the company with self-assessment. So where to from here? Remember, are you innovating? Question. Meet the basic criteria, which is, funding it yourself, owning the IT. Know if you've got core activity or supporting. Put an advanced finding in if you need that assurance. Put an overseas finding if you have overseas spend. Register every year with AusIndustry and lodge a tax return to get your claim. So the last bit is just understand the rules. That's where your advisors can help you. Document as you go. Really, that is what documents, minutes to meetings, board meetings, project outlines, emails between developers. All that is documentation as you go. And complementary media. If you want to have a chat, you're not sure what you're doing, or you're sure of what you're doing but you want to get a second opinion, happy to have a chat as well, complementary meeting. And I was just talking about the advanced finding. So questions, if you have questions now, or we can wait till the end, whichever you prefer. So does that have any burning questions right now?
I don't really get a net benefit calculation. How does that work?
Sorry?
I don't even get a net benefit calculation.
Right, well, I'll have to come and talk to you after.
Right.
So net benefit calculation as in what the tax rate is and what the incentive rate is?
Well, if you spend 100,000 and you get 40% back, it's not a benefit 40.
Yeah, benefit is 40, but remember it depends if it's a refund. So if you have no taxable income, you get 40 back, right?
I get that one.
Yeah.
The next one is what happens.
Yeah, so what happens is that because it's a it's called a rebate either way, but the refund is if you've got no taxable income. But say you have a taxable income, you're a SME under 20 million,
Right.
and you have a refund, so you might have tax payable. So it works out your tax payable, and then the R&D notional calculation, so the 40%, offsets against your tax payable first. And then you get the difference as a refund.
Mariana, can you just explain what a feedstock adjustment is in a sort of generic term?
Yeah, generically, look, feedstock is about when, say your production line is the easiest one to explain. So you normally do your ordinary production line, but say you are developing some new product, and within that you might stop your production line and actually do your R&D testing in certain sets of time. But if you don't stop it, that's clearer, because you might do that R&D and you might throw away the goods that you develop. But say you're doing it in your normal production, and you decide the product you've developed is working, you've trialled it, you've documented, but you sell it. So you carried out R&D, so you have an expenditure, and then you've also sold it. So it's trying to claw back effectively the income you've received. You've got that in your income return as well, but it even claws it back against your notional. Yep.
Hi, I've got a question about the overseas spine booking.
Yes.
In my experience, it's been something that hasn't been achievable. We've had a pretty solid case that we've worked through with advisors, but have ended up with AusIndustry coming back with many questions. We've responded to the questions. They came back with more questions.
you get through?
No, we withdrew.
Oh, withdrew. Okay,
To have the resources to be able to spend the time and respond to their queries. I wondered if that was a typical experience, or if we got unlucky, and whether it's basically telling us whether it's worthwhile going through that process.
Yeah,
Or not.
it's a good question. And was that for software development?
No.
What area?
Um,
Biotech?
So detection, so acoustic detection, so it's kind of software, but kind of.
Yeah, so it sits within some sort of product, the software.
Yeah.
Embedded in there. Yeah, look, I've got a client in the room. We've done this process as well, and we've withdrawn.
Yeah.
But I think it's because they're asking a lot of questions. And is that only in the recent year or prior periods?
So this year and last year.
Yeah.
So in respect to 2016.
And those are the years where they've been tightening the rules. So previously I've known claims where the Oz Industry helped the client to put their claim in, but now they just seem to be sitting back and just asking repetitive questions of what's a new technology, what do you mean, this is what we're doing, and they're saying we'll show evidence. So the burden of proof, yes, we're finding the burden of proof is on the taxpayer, and I think it is becoming very complex. I think Damien's going to run through a little bit of that. So I'm not saying it's not worthwhile doing the exercise, but I probably haven't seen enough to make that judgment call. Yeah? But it's interesting that you've withdrawn as well. So in order to continue, Damien's going to come up and present, and he'll give a little bit about himself as well.
Just to answer your question on the overseas finding, Oz Industry are taking the view that unless you can demonstrate to them that the activity can't be undertaken in Australia, then they're just not interested. And they're taking the same approach to everything at the moment. Like not only overseas finding, but they're also taking the same approach to their review and their audit activity. Good morning, everybody. My name is Damien Burke. I'm a partner with Holding Redlich in the tax litigation team. My history has been, I was previously, before Holding Redlich, I was self-employed doing tax litigation with the ATO, and before that I was a partner with Ernst & Young in what they call their tax controversy area, where we were mostly concerned about doing, we were litigating with the Commissioner of Taxation, and we were also dealing with Oz Industry. I've been dealing with Oz Industry now, so these R&D matters for the last couple of years. It seems to be getting more and more prevalent. So today, I'm happy to take questions as we go through. I'm going to have to talk kind of quickly because I think I might be on the clock a little bit. So if you do have a question and if it's burning that you need an answer to, you might just have to yell out, "Hey Burke, shut up," and I'll take the question. But otherwise, what I was going to touch on today is some of the. First of all, I was going to try and deal with how we got where we are, and then bang on about how, as I have been for the last few years with tax disputes about documentation, which Mariana touched on, and then deal with some of the more pressing issues that are out there now, which are what's attracting the attention of Oz Industry particularly, and the ATO. As you know, the Oz Industry are responsible for registering activities, which are to be subject to the grant, and then they issue a certificate to the ATO, and ATO determine whether the deductions or the expenses which have been incurred fall within those eligibility criteria. I've just been through a review process. We've just had a case, there'll be a decision coming out in a couple of months on another R&D matter, which I'm hoping we can win. At the moment, I think it's about 50-50, but the cases, as you're probably aware, haven't been faring so well in the AAT. Then I was going to get on to some R&D risk management, some more practical issues on how you can avoid some of the pitfalls which we're seeing, and then I was going to deal with some of these more recent, some of the more recent case law. There's a couple on software development as well, which I'd like to touch on if I have the time. So the current position, in 2008 there was a report done to the government which resulted in a white paper which was to do with, entitled Powering Ideas and Innovation Agenda for the 21st Century. At that time, there were just over 8,700 registered R&D claimants. And the white paper was the genesis of the current regime that we have today, which we see in the 2011 amendments which were made to the 1997 Income Tax Act, principally Section 355, Stock 5. Then in 2016 we had a review, another review by what they call the 3F review, Fraser, Finkel and Ferris. And they recommended some changes be made to the current regime, principally because I think that was when the government started to get an inkling that there were some people who were gaming the system. So in 2016-17 we now have over 15,000 registered claimants. Some of the comments which have been made by the government are probably what's giving rise to some of the concerns by Oz Industry, particularly our current Prime Minister when he was Treasurer. He made some comments earlier this year, particularly one in April, that he won't be writing any more blank cheques for everybody that has a good idea. And he's also then expressed the view elsewhere that he feels that the R&D tax program has been possibly taken for a bit of a ride. So the Finkel-Ferris-Fraser review then has brought about the amendments which Mariana has gone through. They're in a bill which is cryptically called, and has nothing to do with R&D in the title of the bill. It says, making sure multinationals pay their fair share of tax in Australia and other measures. So, I don't know about you, but I'm hoping the next white paper they produce might be on the, how they can deal with the naming convention for legislative instruments, which is a little less embarrassing for us. Now, one of these, just to run through quickly what they have. Sorry, this bill is actually was introduced into the House on the 20th of September this year, so it's currently before the House. So Schedule 1 of the bill deals with better targeting the research and development tax incentive. It increases the expenditure threshold, which Mariana mentioned, from 100 million to 150 million. And it links the R&D tax offset to claimant's corporate tax rate. Schedule 2 is one of the integrity measures being introduced, and it's the extension of the general anti-avoidance rules to the R&D tax offsets. It links them directly, and it also introduces a range of other measures. Schedule 3, that's another of the recommendations coming out of the 2016 report, which Mariana touched on also, which is the amendments to the privacy provisions in the income tax legislation so that they can release details publicly of R&D expenditure claims and make them more transparent. There's also amendments which in this schedule which allows the board, which is the Oz Industry Board, Innovation Australia, to make binding determinations and imposing a, I thought it might be a 3-month limit or a 1-month limit on expense. 3 months. Okay, so the importance of documentation, I'll just go back one slide there. In the AAT, if anybody has been reading the case law or watching it as it's come through, 90% of the time Oz Industry are winning. And 90% of the time it's a default win because they never get to the point of whether it's research and development or whether it's innovative or whether it's experimental. The simple fact is that we're the claimants, we have the onus of proof, as in tax cases. I'll give you an example of a tax case recently that I did shortly, but as in tax cases, we have the onus of proof. And that onus is like 50.0001%. So you don't need too much. It's not, Oz Industry and the tax office will say, you have to prove beyond reasonable doubt, like in a criminal proceeding. It's not the case. So all you do need, and I don't want to make this bigger than Ben-Hur or bigger than what it is, but you just do need to have contemporaneous documents, as we will see. This is a very simple argument to run. They sit back, and as anybody who's been involved with the HO, they won't put on any evidence, so they'll leave it up to you. Now, in a case I had a couple of years ago, the legal principle was probably better known for this case, but the facts of it were also hotly disputed by the Commissioner. I just want to give you the example so that you can understand what I'm going to say shortly. But this case was to do with a loss trust. The losses arose in 1989. The litigation occurred in 2005. And we had acquired the loss trust and we acquired the losses. And over the years, we'd used the losses. So the Commissioner came along and said, well, we don't believe that those losses were ever incurred. And you prove it. So fortunately, back in 1989, we had the audited accounts from the company. We also had the share register showing that we had bought a number of shares in a bank called Rothwell's, which was a Western Australia incarnation from a guy called Laurie Connell, some in the room might remember. And that bank had, that float had spectacularly tanked. So we lost our 2.5 million of capital losses that we had in this trust. So my clients took over the trust in around about 91, and they got all these documents. This was before the lost trust trading rules came in, by the way. So when we came to trial, we had to put on evidence, which we did. Fortunately, the person who we acquired the trust from, Mr. Danoon, and this is all in the report, he was available and he swore an affidavit saying, yes, I bought these shares. And after I bought the shares, the bank went into liquidation virtually in the next 6 months. He also had an internal accountant. So we got an affidavit from him. He gave me his number and I got an affidavit. And he also had the external accountant, I think it was PKF, who had audited the accounts. And the audited accounts showed, yeah, we bought the shares written down to zero. So I sent all these affidavits across to the Commissioner, and the Commissioner said, don't believe a word of it. Can you please make sure these people are available for cross-examination? So I wrote to, 2 weeks out from the trial, fortunately, Mr. Danoon was at a cafe in Darlinghurst and he ran into the guy who had sold him these damn shares. And so he rang me and said, you won't believe this, but I've just bumped into the guy. This was literally 2 weeks before the trial was due to start. I flew down to Sydney, got an affidavit from him as well, sent that to the Commissioner, and the Commissioner said make sure he's available for cross-examination as well. So I said, well, what evidence have you got? And they said, well, we don't have anything. But when we got to trial, they cross-examined all these gentlemen, and the judge said after the cross-examination, said, surely you don't expect me to disbelieve them? And the Commissioner said, yes, we do. So anyway, we won. So I'm just saying, no matter what you have, there is always evidence out there, and you can get it. So dealing with some of these provisions in detail, the legislation, the terms of the legislation are here. I'm going to deal with the specific provisions further on, but I just want to make a couple of comments on some of these requirements about experimental activities. So the legislation is clear as to what's required. The development of existing knowledge can constitute new knowledge, so it doesn't have to be something that you just invent one or dream up one day. And it can be in the form of new or improved processes, and an improved process is by definition the development of an existing process. So, thus the reference to improved processes, it makes clear from the text that development of existing knowledge can be capable of being regarded as new knowledge. Now the Commission, Oz Industry take a different view of this. That's why I'm pointing, just getting this out there. As for the purpose, so there's a quote there from one of the cases, which was DVTL, and it's good to bear in mind this, and this is the whole point that I'm making, that there's no requirement, specific requirement in any of the legislation that you have an R&D plan or that you have documents, but the general consensus within the AAT and within Oz Industry is that purpose, when you say we're doing it for the purpose of generating new knowledge, that's the experiments, they won't determine it by reference to retrospective reconstruction, inference or attribution after the activity has been carried out. So a lot of the time with a review, people have, and I'm guilty of it myself, a lot of times with a lot of the companies that I see, the documentation and the ex post facto corroboration of your position is done at the time of the review, which is too late. So Oz Industry are right across it, and they will ask for documents, and as you'll see, a lot of the time when they do come, the first thing they do is they ask for all of your documents, what you've retained and what evidence you have. There was a case of Rix's Creek, and this was a whole of mine decision, but it was one where they had actually tried to get the experts to reconstruct the R&D after the proceedings had started. The comments by the senior member of the AAT there are still pretty apt. So she said, while the creation and provision of documentation is not a statutory requirement to substantiate R&D activities, that documentary evidence is an expected feature of an activity that is systematic, investigative and experimental. And she goes on, an applicant cannot succeed in establishing these requirements in the absence of detailed documents regarding the, recording the process of each activity as it develops. The fact is that if you have the documents and even if you don't have them today, if you can get the documents at some stage, or you can start recording what you need, and I'll come to that shortly, if you can start making records anytime you have the opportunity or you have the knowledge, and you can ask people in your organisation to make those records as well, then you'll be far better placed than if you try to make the records once you are under review or under audit by the ATO. Now, the principal issue that has arisen with respect to documentation and claimants' reliance upon ordinary business documentation to establish and prove in a scientific way that experimental activities have proceeded from hypothesis to experiment, observation and evaluation, and leads to logical conclusions. They're the elements, and that's what we need to demonstrate by the use of contemporaneous documents. Now, some of the issues that do attract the attention of the ATO, this is a slide which actually came from an ATO presentation back in September this year, last month. You'll see there front and centre is one of the things that they're focusing on at the moment, and this slide was a slide of a pack which was presented by the commission, one of the second commissioners, and was dealing with the top 100 companies in Australia, which was it's more than they subsequently issued an addendum for to clarify what they were doing or what they were looking at, and it was mostly dealing with when you could claim R&D for software, and when software was when the software was part of your ordinary business activity. I was going to go through them. I probably won't have time to go through them now, but if you do have any questions at all about any of those, I can give you copies or I can explain them to you later on. Now the steps, what Oz Industry do in particular, and Oz Industry is normally where I see some of the action which is happening at the moment. The Oz Industry reviews will normally start with what they call, a desk compliance review. They'll send you a letter and normally have thousands of questions in it and sub-questions. They'll ask for all your documents, and that will be heralding a more intensive compliance review. Once they've finished that review, they issue a certificate. The certificate's given to the ATO, and then the ATO determine the expenditure side of things. One of the recommendations from the 3F report, which I mentioned previously, which is the genesis of the latest round of amendments, is that those two functions actually be brought together into one body. It seems to be that there's a lot of confusion out there about how those functions are actually working in practice. There is also, I think that once you do get this review, it gives a lot of, and in my experience, what we did when we got the review is we then started to recast and have a look at the definition of our experiment and our hypothesis. Now, with the ATO, they're normally pretty hard on you if you want to change halfway through. But with Oz Industry, they didn't seem to be too concerned. So it does give the positive out of it is it does give you a chance if you look at it closely and you do have a review there and you find it might not be within the statutory requirements, there is an opportunity there, and you might be given the opportunity to actually recast the claim. So these are the steps under the review process. I won't go through them, but the only thing I want to say is in relation to another section, which is 30 capital E. Once you have a review underway, if you get an adverse decision on the review, then you need to ask for it to be internally reviewed. Unless you ask an internal review, you have no appeal rights. Now, once you've asked for that internal review, you'll probably then get the same result because the internal review is done by Oz Industry as well. So you'll probably get the same result. You go to the AAT, and then you need to put on all the evidence. Now, if there is, I don't know if there's any lawyers in the room, but if there is an error in what Oz Industry's done, then you have a right to a judicial review of that decision. Now, what we're doing, or what we're trying to do, is set up a case so we don't have to go to the AAT, but you can go straight to the federal court. And if you have a right to go to the federal court for judicial review, if there's an error of law in what they've done, then you don't want to be in the AAT. Because in the AAT, it gives them the right to fix it up. And they can fix up the decision of Oz Industry. So it's a good time to get advice on when you get that review decision letter to decide whether you want to go to the AAT or you have to go to the AAT, or whether you do have a judicial review right to go to the federal court and just get the decision quashed entirely. On this slide, and I'm aware of my time, I'll try to wrap this up as quickly as possible. I won't go through it, it's on the slide. This is the type of information that they are looking for. I've sort of given an idea of how you can start to make these records. It doesn't have to be anything sophisticated. All it does, it needs to be contemporaneous, and it just needs to be done by people who are involved in the activities. The other way in which you have an option here of also asking for an advance finding from Oz Industry. So if you're about to undertake R&D activities, sometimes it can be a good idea to articulate them in advance, get an application into Oz Industry, get them to make an advance finding. You have your full review rights on that finding once it's made as well. So the key message is to be audit ready, because you will be audited. As Mariana touched on, in the current round of amendments, the government's also beefing up the Oz industry and beefing up the ATO to conduct more reviews, because they think there's a lot more out there that need to be reviewed, and there's going to be a lot more audit activity coming. Preserve documents, ensure that your staff are aware of the requirements, and diarise all activities. The other thing is you don't need a plan. The requirements for a plan were done away with. They did have a plan requirement, an R&D plan. You had to have an R&D plan. That's gone. But it might be a good idea to just put something together in the form of a plan, keep all the documents together. What we've been doing for some of our clients is creating R&D defence files, where we just keep the documents in a separate file. In the case that I've just run, we were fortunate because it was a whole of mine claim to do with the new mining technology, and I'll come to it shortly. But the latest decision, which was handed down last month, is one called Morton Resources, where, funnily enough, they had, when you read the case, the decision's about 105 pages long, but when you read the case, it's hard to think that what they were doing wasn't R&D. But one of the reasons that the member gave, which was Forgy in Melbourne, said that if the research or the activity that you're doing is to comply with the standard, then the principal purpose of your experimentation and your experiments can't be R&D. But that, to me, that just seems a nonsense, because obviously you're going to be complying with the standard, which will be what you have to do by law. But if you are complying with the standard by doing experiments which are creating new knowledge, then the two don't seem to be mutually exclusive. But anyway, the case is called Morton Resources if you want to have a look at it. One of the findings in that case was that the purpose of generating new knowledge, they said, must be more than an insubstantial purpose. This same issue arose in this case called COQ, which will be delivered in the next few months. They found that the fact that an alternative purpose for the activity may be identified as a substantial purpose does not necessarily lead to the conclusion that the purpose of generating new knowledge may not also be identified in that way. So COQ, this was heard in August. The same issues as arose in Morton Resources arose in this case. In our case, the expert, who was called by Oz Industry, had said that his sole premise that it wasn't R&D was based on the fact that we didn't have an R&D plan. This was a bunch of miners who were a small cap mining company. The company had been incorporated to figure out a way in which they could mine very highly banded seams of coal. So there was a seam, and then there was clay, and then there was a seam. And these deposits had been overlooked by Xstrata, by BHP, by Rio Tinto, and these guys had figured out a way to unlock it. They had sent it over to the US to do testing, and they had figured out how to crush the coal, how to wash the coal. And that's what our case was all about. Now, their expert, during his evidence, he actually said, and I've quoted what he said here in his verbal evidence, which wasn't what he said in his report. So he thought that if we could do it, we didn't think we could, but it would unlock all these similar deposits all around the world. Anecdotally, and there's a couple of cases I've mentioned which have involved software development, but I won't go into those. They're in the notes. I think I better wrap it up so I can make sure that I get you guys out of here on time. So, thank you very much. And if you have any questions, I'm happy to take them.
Does anyone you're all doing R&D or thinking about doing R&D. Is there any questions you want to ask that might, you know, help you resolve, or if you're sort of uncertain as whether, or you're going through a dispute at the moment, or just thinking about doing it? Anything that you'd like to bring up? Group therapy is always good. No? All shy? The slides are there. They will be sent as a pack. Thank you for coming today. Don't all rush out the door. There's certainly coffee and breakfast if you've missed out on having a breakfast, and you know, we're going to stay back here a little bit longer so you can have a chat to us individually if you have any burning questions. I appreciate you coming today, and just like to thank Damien for attending today and providing his insights from the tax disputes and litigation side. So